Investors love monopolies, but governments want to break them up. How the regulator is managing our love-hate relationship with market dominance.
Look, every business person, wants a monopoly. That's kind of, let's be honest. That's what you're driving for when you're a business person. And it's that kind of thirst for an edge and a way of making a profit that actually delivers all the good things that we get.
But
I just don't want them to succeed.
It's Friday the 5th of April and you're watching Markets with Madison. Investors love them and entrepreneurs aim to build them, but consumers loathe them and governments are increasingly coming after them. Monopolies hold market power, but a lack of competition could now be more of a curse.
And we are calling it iPhone.
The US Justice Department is suing Apple for allegedly monopolising the smartphone market with iPhones and its App Store. It's one of many antitrust actions against big tech. Meta, Google and Amazon are all in the firing line too. A lack of competition is considered negative for consumers because it means there's less pressure on prices and service standards. According to William Magnuson's book, For Profit, corporations with market power have not always upheld ideal business practices, spanning from tax collection in ancient Rome to British trade with India and later US railway operations.
The continent was spanned with rails.
Other historic monopolies have included the De Beers Diamond Syndicate, Rockefeller's Standard Oil Company, US Steel, and American Tobacco. And near monopolies exist, like Google with search, Meta over social networks, and locally, like dairy giant Fonterra and Fletcher Building with certain plasterboard products. Most monopolies today have government licences to rule public utilities, like postal services and telecommunications lines. The likes of contrarian thinker and investor Peter Thiel argues that the most valuable businesses avoid all competition. But doing so now seems to come with more scrutiny. The Commerce Commission Chairman, John Small, is the king of keeping capitalism in check. The state agency's consumer protection mandate means it monitors the money made by essential services, such as telcos, gas and electricity companies, and airports. It also has powers to investigate, and it's using them, launching market studies into fuel retailers, supermarkets, building product suppliers and banks, finding excessive profits among many of them. For investors though, that's largely a positive attribute. Monopolistic characteristics are something investors actively aim for, often described as investing in businesses with moats, meaning competitors can't come near them. But with governments wielding regulatory sticks that can result in large fines or costly structural changes, how wary should investors now be of market dominance? And what or who is in the Commission's sights next? Well, thank you so much for your time and appreciate you having us in. Good to be here.
That's very nice to meet you.
I want you to start, please, by explaining all of the opolies. We have monopolies, duopolies, oligopolies in this country. Can you explain the difference between all of them and where they exist and what sectors in New Zealand?
Oh, that's okay, sure. So a monopoly is just one. That's one firm supplying the whole market. So the classic ones in New Zealand would be, for example, the power lines that run down your street. Doesn't make sense to have two power lines running down your street. So there's only one company does that. They're a monopoly of that service. So that's one, that's a monopoly. Duopoly is where there's two. And the supermarkets are probably the best example. The two supermarket operators, big supermarket operators in New Zealand, probably the best example of that. There's only two of them. We can talk about how they ended up like that, but that's a duopoly. And then further on, if there's more than two, up to about 4 or 5, you might call it an oligopoly. And they've got a little, they're kind of similar to a duopoly, but there's more of them.
Largely, how do they come to exist? A monopoly is government created and allowed to exist in the case of utilities, correct?
Well, it's kind of, yeah. I mean, it traditionally would have been provided as a public service, but now it's now often they're privatised, they're privately owned, But it just doesn't make any sense to have any, like nobody would invest against that, except around the edges. So somebody might, put up a solar panel on their roof so they don't have to buy so much power out of the power lines. How do the other ones come about? Often they come about through changes in technology that lead to aggregation over time. So if you think about the dairy industry, dairy processing, there used to be hundreds of dairy processing companies all around the country, all little co-ops. And then as technology changed, farm refrigeration, on-farm refrigeration, they could hold their milk for longer, made sense to transport it further, and so dairy companies amalgamated into bigger and bigger units. And now we've got Fonterra. So that's another way that it can happen. And then sometimes, that's an example of mergers that did that. So a merger process is another way that companies get big.
It seems to be very common in New Zealand that there's only one or two, if not three or four, in the case of banks, operators in one particular sector. Is there sort of just a level of opoly that we have to accept in this country, given that we're so tiny?
So, to some extent there is. I mean, there's basic costs in providing services of various sorts. And in a market New Zealand size, 5 million people, that's kind of constrains how much total demand is there. So you might, if New Zealand had twice the population, we could probably support more of these firms and more of them competing against each other. So there is something kind of natural about it. But at the same time, the issue really there's a tension here, right? So on one hand, that makes really good economic sense. And you might think that, if you've got 3 or 4 firms competing against each other, then that could be quite good strong competition, but it's not always like that.
Correct me if I'm wrong, John, but it's not illegal to be a monopoly. It's just illegal to exert that monopolistic power through anti-competitive behaviour. Is that correct?
That is correct, and let me just emphasise that last piece, which is really important. It's not illegal to exert monopoly power by charging a very high price. There's nothing illegal about that in New Zealand, unless you're in a regulated sector where your prices are controlled. That's right. There's nothing. There's no. So in the US they have a monopolisation law. If you're attempting to monopolise an industry, that can be a breach of a law. We don't have that.
What's your measure then of exerting that power illegally or incorrectly? Is it excessive profits, or are there other things you think?
No, it would be things like exerting that power in a way that stopped somebody else from competing. So deliberately, so you're trying to compete with me, I've got a bit of market power, I find some way to just squeeze you out that uses my market power and means you've got to exit the market. That's the kind of thing that would be a classic abuse of dominance use of market power. But then sometimes people can illegally come together, collude with each other, who are supposed to be competing, but they collude with each other and raise prices that way, and that's illegal.
Cartel behaviour, is that what you call it?
Cartel behaviour, exactly.
On the market dominance, and if we do look at excessive profits, in the eyes of investors, that's a great thing. If I'm investing in a company, I would love for it to make an excessive return above capital invested. How do you balance, as the Commerce Commission and the chair of it, that making a good return for shareholders, but also ensuring that consumers get a good deal? Is there such a thing as having both?
There kind of is. As long as people are getting rewarded, the investors are getting a reward that's consistent with the risk that they're taking, then that keeps investors in the game. And they're happy because they're not losing money, and that could result in prices that are good for people. The issue that we get concerned about, for example, in a market study, is profits that are much higher than is consistent with the risk you're taking. They can be an indicator that there's something not quite right about the way that these firms are competing, and so we don't. It's not that we see it as an output of competition, a result of something that it's an indicator. So what we're really interested in a market study is how do these firms compete? What is the process they go through, rather than what's the profits that pop out the other end.
What are the outputs that show you that ideal competition is occurring in any market? What does that look like to you?
Well, it looks like real, genuine rivalry. People trying deliberately, you can see people trying to eat each other's lunch. And
So you like a fight? You like to see some boxing in the ring?
Absolutely. We want to see. That's what we want to see. We want to see firms going after each other, and that drives them to do better. It drives them to innovate. Invent products and services that people want. It keeps prices low. And so that's the kind of, that's a great outcome. And if we can get that with only 2 or 3 or 4 or 5 firms in a market, fantastic.
The likes of Peter Thiel, though, a big-time investor, would argue that that's just competing profits away and it's a race to the bottom. So how is that good for investors and consumers in any way, if that's just a complete race to the bottom?
So every business person, wants a monopoly. That's kind of, let's be honest. That's what you're driving for when you're a business person. And it's that kind of thirst for an edge and a way of making a profit that actually delivers all the good things that we get. So it's human instinct, and it's not a bad thing at all. For people to be trying to do that.
But?
I just don't want them to succeed. I don't, it's not that I don't want them to succeed, but an enduring monopoly then ends up being something that is kind of plundering people, or can potentially be. And that's the kind of thing that, So, for example, if somehow we'd arrange things so that you owned all the power lines in the country,
I'd be rich.
You'd be rich, probably not for a very long time though, because the government would soon come along and say, hang on a minute, Madison owns all the power lines, and she's plundering us, and we all need this. This is this is affected with the public interest, and it's an essential service, and so we'd stop you from being rich.
If we can bring up Peter Thiel again, he believes that true innovation and value for any business comes from completely avoiding competition. As you've mentioned, that anyone should aim to build a business that no one else is building. And in many instances, that situation is actually better for consumers because they're getting a product or a service that they never knew could ever exist before, or they're being offered or sold something that no incumbent ever could or would. So don't you agree that there are some benefits to some consumers by monopolies existing?
Oh, look, absolutely fine. I've got no problem with that. If somebody goes and invents something that's brand new and everyone wants it, that's fantastic. And what you'd expect then is that person would do very, very well. And if the market was actually workably competitive, they might do well for, a few years. And then somebody else would come along and say, hey, look what they did. We can do something that's a bit similar, a little bit of innovation around the edge. And so there's nothing wrong in a workably competitive market with someone having an edge. The question is, how durable is that, and can somebody else contest it?
It's more the defence of that edge where it can become anti-competitive. Is
that
correct?
and even that is not. If somebody can successfully defend their edge without breaking the law, good on them. Then everyone's going to win.
You've spoken about this a little bit already, but innovation, and I think this is a very important conversation to have given the technological advances that are happening in front of us with the likes of AI. How is the Commerce Commission thinking about that or watching that globally, given that that might be the ultimate holders of all economic growth and potential in the future?
Yes, I think AI is going to probably disrupt the service industry in the way that it hasn't previously. That, you think about computers and the internet may have disrupted some manufacturing sectors, but AI is really going to attack the service industry. We're really we're watching it really closely. We have good international collaboration, good links. We're not a world leader in attacking taking antitrust cases against big platforms. We don't have the resource for that kind of thing, but we do watch it very, very carefully. I personally find this area really interesting. I know that in the US, the antitrust authorities are worried about some bottlenecks that are already appearing in the AI supply chain. On the other hand, my understanding is that in China, AI is just going ballistic, and they don't seem to have those sort of same problems. So, I think as long as I guess we're watching it closely. One potential concern for us is, sort of algorithmic price fixing, where it's not you and I agreeing on a price, but we both run separate businesses, and we both have algorithms that set our prices, and those algorithms watch each other, and so that kind of thing, automated price fixing is a potential antitrust application of AI, but I think it's got tremendous ability and potential to improve our welfare.
How would you regulate an algorithm?
No, you might. You might say that you're not allowed to have it programmed in that kind of a way. You could do that.
Another case of competition that is playing out quite loudly domestically is the Auckland Airport versus the airline Air New Zealand. Is that competition playing out perfectly in your mind, or is that just petty and benefits no one, not even consumers?
Let's not talk about perfect competition. That's kind of a textbook model, and it's got all sorts of problems with it. But what's happening there, I think, with is a sort of there's a common interest, which is the airport wants an airline, the airline needs an airport, so they kind of need each other, and there's they're both wrangling over the terms of that engagement. Is essentially the way I see what's going on there.
What role does the Commission play in that? Do you step in at any point in that process?
Our role in airports is to make it clear what rate of return the airport is targeting when they do their capital investment. And so we every few years we look at each of the three big airports, Auckland, Wellington, Christchurch, and we say, tell us your CapEx plans, tell us your pricing plans, and then we run that through our models, and we say, if this all came true, you'd end up with a rate of return of X, and we think that your cost of capital is either bigger or smaller than that. That's the way the system's worked. It's worked like that for about 20 years, and it's actually reasonably effective. We've had a couple of instances where airports have kind of had target rates of return that are quite well above what we think is fair.
Wellington Airport in that case, wasn't it?
That was a classic example, and once the information came out, they revised their plans. We didn't have to do anything other than essentially publish the information.
Is there anything that makes you raise your eyebrows about this Auckland Airport instance? About the CapEx required and who they're asking to pay for it?
Look, I'd rather not comment on that. As you know, that we've got a price setting event underway, and our team is currently working on that process, and it's going through that normal process. So I think we probably better just let that play out.
You are doing market studies on the side of all of this as well, and I wonder how much influence the cost of living crisis, high inflationary economic environment that we're in has played into that, or at least pushed public support for it. How do you think about that?
Well, we're really, really conscious that consumers are hurting. We try and stay close to the people that we're trying to serve. It's our statutory obligation is to promote the long-term interests of end users. We know they're hurting. And so when we do market studies, we're always looking for a kind of a durable fix. I think that some people are frustrated because it's not a great big hammer that just comes in and changes the prices immediately. It's never designed like that. It's designed to try and make the mechanism work better. Sometimes we get really early wins on the way through, and other times it's a bit like slow boring of hard boards, but I think we're very conscious of the fact that we're doing this for the consumer and that we're trying to get things sorted out for the long term.
One thing that we could see now that we are officially in a recessionary environment is that businesses will make less profits, which would most likely result in more consolidation and merging of companies. The Commerce Commission's role is also to approve or decline those in many instances. How lenient or not are you going to be if we do start to see that as a trend, given the economic environment out at play?
We've already got mechanisms that deal with the situation where the target firm is a failing firm, and so we know how to deal with that. We've had one or two of those recently, where essentially if this firm doesn't get bought by this one and this is the only buyer in town, then it's going to go out of business, all its assets are going to disappear and everyone's going to be worse off. So we can handle that in our current system, but we don't, we have the same test for everything, which is this, it's a forward-looking risk analysis of two scenarios, one where the merger proceeds, one where it doesn't, and the question is this one going to be substantially less competitive than that? So it's the same test, different economic environments that'll affect the numbers and so on and what we think the outlooks are going to be, but yeah, it's the same test.
On the market studies, how should investors think about the regulatory eye as a potential risk with these market studies becoming more common?
I would like to see them continue to work through the economy. I think they're really helpful. It's, you think about the banking sector, there's been no competition study in the banking sector in New Zealand ever. This is the first one. In fuel, it was the first one in 30 years since they deregulated it. I think all these industries can do with a bit of a health check. And I know it's burdensome for the firms that are involved, but these are big powerful companies and it's a temporary thing. And what we're trying to do is to improve the well-being of everybody. I think we're respectful about the rights of business. We certainly try to be. We try to really hear and understand things from their point of view. So I would like to hope that it's not such a scary prospect for firms in the future to be subject to such things.
Well, it shouldn't be then seen by investors as like an attack on big business. It's rather keeping capitalism in check to some degree.
Yeah, I mean, absolutely. It's about the system that we have is one where markets are kind of a social construct, right? That we've got a system of laws that protect property rights and protect other people's rights. And that's all designed, most acts these days have a purpose statement. What are we trying to do here? And so all we're trying to do is to keep businesses and industries, whole industries, kind of pulling in the right direction, pulling in the direction of serving consumers well, whilst also doing well themselves. We've got no objection. I mean, it's not in anybody's interest to drive these firms out of business, let alone ours. That's the last thing that we want.
Do you perhaps measure success of these market studies by structural changes occurring, or do you think the success is just in doing the study itself?
It doesn't have to be structural change. It could be conduct change. I think the studies themselves are helpful because they shine a light. They're informative. People understand then how the system works. But a little bit of conduct regulation can go a long way. I mean, for example, the first study we did was in fuel, and we came to the view that if we could free up the wholesale market in fuel, then that would be a good thing. And so we recommended that the contract structure between importers and distributors be changed and freed up. And that once that change came in the few months after that, something like 30% of the wholesale trade in fuel changed hands. So there were a whole lot of firms that weren't with their preferred buyer or seller who were able to then shift. Now, I think that's a wonderful thing for freedom of trade, and it certainly helped that market to get better. And you can see benefits of that now with distributors, smaller companies growing, and investing in new retail sites all around the country.
At what point is that meddling, though, and that is the Commerce Commission interfering in markets and in business?
Yeah, you could call it meddling, but we don't forget we don't. All we do is make recommendations, right? So it's up to others to decide whether or not they think they agree with it, basically. So yeah, I mean it is. If somebody agrees that this is the right thing to do, yes, of course it is meddling.
But it's mere suggestions.
Well, we make recommendations. And I mean, you think about what we're trying to do in grocery now. Yes, are we meddling in that market? Is the government meddling in that market? Yes, they are. But I mean, that's an industry that should serve the New Zealand public better than it does.
Do you think that at any point this could become such a risk to investors or perhaps offshore investment that businesses will just stop investing, or investors will stop investing in New Zealand if they view this regulatory meddling as a risk?
This is something that's sometimes said but rarely evidenced, and but of course as I said before, we're very conscious of the need to keep investors in the game and keep them whole and give them something to strive for. I don't think we're anywhere near that as a result of our work, and I hope we don't get near that, because I think we need people to be investing in these businesses. Absolutely.
So who's next?
Oh gosh, I don't know.
How long's the list? And who's on the list?
No. This current study wraps up in August. So we'll see after that.
Can you give me any inclination? We knew that building products was next. We knew that banks were on the list. Who else do you think could perhaps be in the sites that you think may need a little look under the hood?
You when you arrived, you had the monopolies. You know what the monopolies are. So if we continue, if this government wants to continue looking at the big monopolies, then there's a few of them out there. They may decide they want something else. They might want us to look at occupational regulation, for example, or I don't know, EV charging, or who knows what. I don't know.
Hopefully you have that expertise in-house.
Well, we've got generic expertise. When we get one of these assignments, we dig into it. We know how to go about it. Yeah.
Well, I look forward with interest to see what you do next, John. Thank you so much for having us in.
Thank you. Pleasure.
I said to John at the end of this interview that I was somewhat surprised by his business acumen. I was going into this half expecting the Commerce Commission to be anti-profits in a way, but as you saw there, the chairman is actually quite pro them. And John told me that's because he gets it. He's actually had two of his own businesses. They were two internet startups, but they did fail. He was also a dairy farmer and had a consulting business as well. I'm keen to hear what you think of the Commerce Commission's approach and agenda, and if you came to the same conclusion that I did. Now go put your money to work. Thanks for watching Markets with Madison, the New Zealand Herald show for interested investors. If you want to stay up to date with financial markets, click the subscribe button below, and you can watch our other episodes here. Stay up to date with all the business news and numbers as they land on nzherald.co.nz.